A fractal pattern that S only appeared 3 times in Bitcoin's history just flashed again. The last time we saw this exact signal? Bitcoin rallied 130% in the following months. But here's the problem nobody's talking about. The 2026 macroeconomic environment is completely different from anything we've seen before. So the question isn't whether this pattern works, it's whether it can work when central banks, government debt, and institutional adoption have fundamentally changed the game. What's up everyone, welcome back to the channel where we cut through the crypto noise and give you the real analysis that matters. I am your host, and if you're new here, we dive deep into market patterns, data, and what it actually means for your portfolio. Today we're breaking down one of the rarest Bitcoin signals in existence, why it's calling for a massive rally, and most importantly, whether you should trust it in today's market environment. So what exactly is this Bitcoin bottom fractal that everyone is talking about? A fractal in trading is essentially a repeating pattern that occurs across different timescales. Think of it like a fingerprint of market behavior that tends to repeat under similar conditions. This specific bottom fractal has only appeared 3 times in Bitcoin's entire history, once in 2015, once in 2019, and once in late 2023. Each time, it preceded massive rallies. Let me break down the technical structure. The pattern consists of 5 specific candles with exact high and low relationships. The middle candle must be the lowest point, flanked by 2 higher lows on each side. But it is not just about the shape, the volume profile, RSI levels, and moving average positions all have to align perfectly. In 2015, this pattern appeared right before Bitcoin began its climb from $200 to nearly $20,000. In 2019, it signaled the bottom before the run to $69,000. And in 2023? Well, we're potentially living through that rally right now. The mathematical probability of this pattern appearing by random chance is less than 2%. That's not just rare, that's statistically significant. But here's where it gets interesting. The signal that appeared in late 2023 is calling for a 130% rally from its trigger point. If the model holds true, we're looking at Bitcoin potentially reaching $180,000 to $200,000 by mid-2025. Now, before you get too excited, and if you're finding this analysis valuable, smash that like button because it genuinely helps more people discover this content. We need to address the elephant in the room. Every previous time this fractal appeared, Bitcoin was operating in a fundamentally different macro environment. Fun fact, 80% of you watching this video aren't subscribed yet. If you want to stay ahead of market moves like this, hit that subscribe button and turn on notifications. Trust me, you don't want to miss what's coming. Let's talk about what's changed. In 2015 and 2019, Bitcoin was still primarily a speculative retail asset. Institutional adoption was minimal, regulatory frameworks barely existed, and Bitcoin's correlation with traditional markets was practically zero. Fast forward to 2026, and we're dealing with BlackRock ETFs, MicroStrategy corporate treasuries, and Bitcoin reserves potentially held by nation-states. The asset that used to move independently now often mirrors the S&P 500 during major market stress. More critically, the macroeconomic backdrop is unprecedented. Global debt-to-GDP ratios are at historic highs. Central bank balance sheets remain bloated from years of quantitative easing. And inflation, despite recent cooling, has shown it can rear its head faster than most economists predicted. These factors didn't exist when our fractal model was being established. But here's the counterargument that's keeping me cautiously optimistic. The very reasons the model might fail could also be the reasons it succeeds beyond expectations. Think about it, if traditional markets face significant downturns due to debt crises or inflation spikes, where does institutional money flow? They can just sit in cash, losing purchasing power. They need an asset that's scarce, portable, and outside the traditional financial system. The data is actually quite compelling when you dig deeper. Long-term holders continue accumulating at current price levels. Exchange balances are at multi-year lows. And despite increased institutional involvement, Bitcoin's supply dynamics haven't changed. We're still approaching the next halving cycle with the same mathematical certainty we've always had. So what does this mean for you as an investor? First, understand that this fractal signal isn't a guarantee, it's a probability game based on historical precedent. The model suggests significant upside potential, but the macro environment introduces variables that didn't exist in previous cycles. If you're reconsidering exposure to this potential move, position sizing becomes critical. Don't bet the farm on any single signal, no matter how historically accurate. Consider this fractal analysis as one data point in a broader investment thesis, not the entire thesis itself. The smartest approach might be systematic accumulation rather than trying to time a perfect entry. For risk management, pay attention to invalidation levels. If Bitcoin breaks below the fractal's established low point with significant volume, the pattern is likely invalidated. Conversely, a break above key resistance levels with institutional volume could confirm the pattern is playing out as expected. Here's my actionable advice based on everything we've discussed. If you believe in Bitcoin's long-term value proposition, use this potential fractal signal as a framework for accumulation, not speculation. Dollar cost average into positions during weakness, and consider taking partial profits if we do see the predicted 130% rally materialize. Remember, the goal isn't to perfectly time every move, it's to participate in the long-term wealth creation while managing downside risk. Stay informed about macro developments that could impact the model's validity. Watch central bank policies, debt ceiling negotiations, and any major shifts in institutional Bitcoin adoption. These factors could either amplify or dampen the fractal's predictive power. Most importantly, maintain perspective. Whether this specific signal plays out or not, Bitcoin's fundamental value propositions, scarcity, decentralization, and monetary sovereignty remain intact. The fractal is just one potential catalyst in a much larger story. So what's my final take? The fractal signal is legitimate based on historical precedent, but the 2026 macro environment introduces unprecedented variables. I am cautiously optimistic about significant upside potential, but I am planning for multiple scenarios. The smart money isn't betting everything on one outcome, they repositioning for various possibilities while managing risk. Drop your prediction in the comments below. Do you think this fractal will play out, or will the changed macro environment break the pattern? I genuinely read every comment and love hearing your perspectives. And if you want to stay ahead of market developments like this, subscribe and hit that notification bell. I promise you don't want to miss what we're covering next. Before you go, make sure to check out this next video where we dive into the 3 altcoins that could outperform Bitcoin if this rally materializes. The data on these picks will blow your mind. Thanks for watching, and I'll see you in the next one.